The death of the pending state. Institutional capital is moving at 150 milliseconds because Solana just deleted the concept of pending transactions. On May 11, 2026, the Alpenglow upgrade hit the community test cluster, effectively ending the era of 12-second finality. For 3 years, we accepted optimistic confirmations as a hack for speed, while real settlement actually took several seconds in the background. Now, major financial players like Visa and JP Morgan are treating the network as a real-time clearinghouse rather than an experimental ledger. This transition is why we are seeing a record $1.1 billion institutional inflow streak. The hardware and the math have finally aligned to make the wait time for money virtually non-existent. This speed is driven by a two-part consensus engine called Votor. Votor, the single-round consensus. Votor is the mechanism that allows Solana to achieve finality in just 1 or 2 rounds of voting. In the old system, validators spent massive amounts of bandwidth and time, cycling through multiple rounds to confirm a block. Votor changes the geometry of consensus by moving validator votes into a lightweight off-chain aggregation model. If 80% of the network stake is responsive, the block is finalized in a single round, roughly 100 milliseconds. If the network is under stress and only 60% of the stake responds, it falls back to a second round, hitting finality at 150 milliseconds. It is a deterministic system that eliminates the old epoch lockouts and slashing risks associated with missed slots. But getting the votes right is only half the battle. The data still has to travel across the planet, which brings us to Rotor. Rotor, direct data propagation. Rotor replaces the legacy turbine protocol, which used to move data through a multi-hop tree structure that added latency at every branch. Think of the old way like a telephone game, where every person adds a tiny delay before passing the message along. Rotor ignores the tree and establishes direct validator-to-validator paths based on staked weight and bandwidth efficiency. It uses erasure coding to fragment block data, ensuring that even if 40% of the network goes offline, the remaining nodes can reconstruct the full state instantly. This is not just a software patch. It is a total removal of proof of history in favor of a lean, bandwidth-saturated propagation layer. This shift has made the network's capacity scale directly with the quality of global hardware. This structural stability is precisely what the banks were waiting for. The billion-dollar confidence interval. $1.1 billion did not flow into Solana because people like the price. It moved because Western Union and Fiserv are now using these rails for $100 billion annual remittance volumes. Critics used to argue that Solana was a retail casino that could not handle institutional weight without crashing. However, the Alpenglow architecture includes a 20+20 fault tolerance system that handles crashed nodes and malicious actors simultaneously without a network halt. Even during the peak volatility of May 2026, the network maintained its 150 millisecond target. We are seeing Bitwise and other ETF issuers capture 80% of new institutional capital because the risk of a network freeze has been engineered out of the protocol. This reliability has fundamentally reclassified Solana as a digital commodity in the eyes of regulators. The part no one wants to say. The real implication of Alpenglow is that Solana has successfully traded its unique cryptographic identity for institutional utility by deleting proof of history and Tower BFT. By prioritizing Votor and Rotor over the original white paper design, the network has officially shifted from an experimental tech playground to the primary settlement layer for global finance. For the investor, this means the era of explosive, speculative retail volatility is likely giving way to a more stable, liquidity-thick environment controlled by high-frequency trading desks. For the engineer, it proves that bandwidth and direct hardware optimization will always beat complex cryptographic clocks in a live production environment. The network is no longer trying to be a better blockchain. It is trying to be a faster, cheaper version of the New York Stock Exchange. Watch for the full mainnet activation in the third quarter of 2026, as Western Union begins migrating its first $10 billion in pilot volume to these new rails. Subscribe for more.